Welcome to this explainer. Today we're demystifying a super specific, potentially lucrative but strictly regulated world, the tax recovery process in the Canadian province of Alberta. Now, if you're a foreign investor, maybe tuning in from Brazil, and you've heard whispers about snagging real estate for pennies on the dollar because of unpaid taxes, you need to understand that Alberta has its own completely unique system. We're going to break down exactly how it works straight from the official sources.
Here's our roadmap for today. 1. What is a tax sale? 2. The legal timeline. 3. Auction and rules. 4. Buyer risks and guarantees. 5. Finding official lists. And 6. A practical summary and disclaimer.
Section 1. What is a tax sale? And understanding the Alberta context. Okay, let's dive into this. Because to master any market, you really have to speak its language.
In Alberta, they don't just throw around a generic term like tax sale. It's officially called a tax recovery property. This means a property has unpaid taxes and the local municipality is legally stepping in to recover that money. And the absolute ultimate authority here, a provincial law called the Municipal Government Act, or the MGA. It's literally the Bible for this entire process. If you read anything online that contradicts the MGA, scratch that, it's just plain wrong.
Now this brings us to one of the biggest, most dangerous mistakes investors make, confusing provincial law with municipal practice. The province sets the baseline uniform rules, stuff like maximum timelines and the requirement for a public auction. But the actual local execution, how a city, town, or county actually runs the sale and publishes notices, that varies wildly. What happens in a major hub like Calgary might look completely different in a small rural county. Never overgeneralize.
Moving on to Section 2, the legal timeline. Let's look at the actual path the property takes to reach public auction.
So how does a normal property end up on the auction block? Well, it doesn't happen overnight. It's actually a multi-year process. In year 1, taxes go unpaid and the property falls into tax arrears. If ignored, by year 2, the municipality slaps an official tax recovery notification on the property title, basically a formal lien. Finally, if we hit year 3 and the owner still hasn't settled up, the municipality gains the legal right to push it to a public auction. It's a very long runway, designed to give the owner every possible chance to pay up.
Listen closely, because we need to bust a massive myth right now. If you're used to the U.S. market or other Canadian provinces, you might expect a redemption period after the sale. No way. Not here. In Alberta, the redemption period happens before the auction. The original owner can pay their debt right up until the very last second before bidding starts. But the second that hammer falls, it's done. The sale is 100% final. There is no magic post-sale period where they can take the property back from you.
Section 3, Auction and Rules. Let's see how the bidding actually works on the big day.
Forget about those late-night infomercials promising you can buy a mansion for $500. Alberta uses a concept called the reserve bid. By law, municipalities have to set this starting bid incredibly close to the property's fair market value, not just the tiny amount of taxes owed. So if a house is worth $300,000 and they owe $5,000 in taxes, the bidding starts right around $300,000. They do this to protect the defaulting owner's equity.
The auction itself is usually public and in person, though some places use sealed tenders. And if you win, the financial demands are brutal and immediate. You're typically required to drop a deposit right on the spot, often 10% in cash or certified funds. And the final balance? You'll have incredibly strict deadlines, sometimes just days or a couple of weeks. For a foreign investor, this means you absolutely must have liquid Canadian dollars ready and waiting. Section 4. Buyer risks and guarantees. Let's keep our expectations grounded and talk about what you actually get. The good news? You usually get clean title, wiped of most prior mortgages, though some government exceptions can apply. The bad news? The property is sold strictly as is. There are absolutely no warranties. Oh, and interior inspections? Forget about it. They are strictly forbidden. You are buying sight unseen. You could inherit severe structural damage, angry tenants refusing to leave, or a house completely filled to the ceiling with junk. Municipalities literally spell this out for you. You'll see this standard warning everywhere. Buyer beware. Municipalities make no representations regarding the condition or status of the property. Once you buy it, you take on 100% of the physical and legal risks. It's an operation that requires serious guts and intense due diligence. Section 5. Finding official lists. Let's look at how to source the exact right data. So how do you find these properties without paying private aggregators for outdated info? Here's your 3-step official funnel. Step 1. Check the Alberta Gazette.
That's the official provincial publication where all public auction notices must legally be printed. Step 2. Go directly to that specific municipality's official website. Step 3. Track down and request the official auction package. This document contains the exact local rules and terms for that specific sale. When you're digging through municipal websites, you have to know what you're actually looking at. A future active list just shows properties behind on taxes. Honestly, most of these will get paid off and never reach auction. You want the public auction notice. That's the golden ticket showing an actual verified sale date. And don't mix that up with post-sale results, which is just historical noise about what sold last year.
Section 6, Practical Summary and Disclaimer. Time for our final takeaways.
So, what's the ultimate checklist here, especially for Brazilian and foreign investors? Remember that MGR rules govern the big picture. Expect absolutely no post-sale redemption. Have your liquid Canadian funds ready to go. Always research how the specific municipality executes their sales. And above all, beware of the as-is condition.
Quick legal disclaimer, this explainer is strictly for educational purposes. It's not financial or legal advice. If you're investing from across borders, you absolutely must consult professional cross-border legal and tax experts to handle the massive implications of moving money and buying foreign assets. Do not skip that step. To keep things totally transparent, everything we've covered comes straight from primary official sources, the Municipal Government Act, the Alberta Gazette, and official municipal government websites. Always trust the source material.
So, I'll leave you with this thought. Knowing you need major liquid capital, you're navigating strict local rules, and you're taking on massive physical risks with zero guarantees, are you truly prepared to do the extreme due diligence required to buy a property sight unseen in a foreign country? The opportunities in Alberta are definitely real, but they demand a highly educated investor. Thanks for joining this explainer, and we'll catch you next time.